Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here. Welcome back to another weekly watch list video where we go over everything you need to know for the week ahead in the markets. Up on the screen there is the earnings for this coming week. It looks pretty jam-packed, although all the big, heavy tech stocks have already reported for the most part. I think we're just waiting for a couple more in the weeks to come. But other than that, we have Disney on Wednesday after the close. This stock has not done very well this year. And that also goes to a bigger point, really. We saw Apple come out with its earnings last Thursday. They didn't kill it, right? They still, made a ton of money, but they just did not show that huge beat with a huge guide for the next quarter. We just didn't see it, and the market just sold Apple off. That's the problem, and I said this in the last couple videos. When you get a huge rally into earnings, a lot of times, if these companies do not blow their earnings reports out of the water, and not just what they made, but the guidance going forward, you will see the stock really get hit hard. And that's what we saw with Apple. So if you don't crush earnings and guidance, and the stock is up a ton this year, be careful trading these stocks around earnings. If a company is beaten down for the year, kind of like how Disney is, then the expectations there, it's not built into the stock price if they show a decent report, right? It might get a nice bounce. So just keep that in mind. It's all about the guidance, the future, okay, from these companies. That's the most important thing to pay attention to, not how they did the last quarter. Okay, that's in the past already. The market's always looking forward. Keep that in mind. All right, so that's your earnings up there on the screen. All right, now going over to the economic calendar, we always like to look at this when we're trading, what we have coming up for the next week. These things can move the markets. You need to be aware of them. So I highly recommend finding an economic calendar somewhere that you like. I use Market Watch, but there's so many other ones out there. This is just something that I look at. It's very clean, but you can go on other economic calendars and you can actually see other countries and their key economic reports as well, which is helpful. All right. So this coming week, the only thing that I really care about is Thursday, we have that CPI, right? And then on Friday, you have the PPI, the producer price index. So you have the consumer price index and then the producer price index. These are two inflation gauges. The Fed likes to look at these. So we will be looking at them, okay, and seeing how the market reacts to those reports. So that's your economic calendar right there. Taking a quick look at the bond market, it's so heavily inverted, this yield curve. Now, if you're a new trader or if you're new to the markets and you don't know what an inverted yield curve is, it's when those shorter dated treasury notes, right, are yielding more than the longer dated treasuries. And that's what we're seeing here. Most of the time, when you have an inverted yield curve, you will see a recession coming. This started about a year ago. It takes 12 to 18 months to actually see these affecting the overall economy. So we're right getting into that sweet spot of where this can start to affect the economy. All right. Every time it inverts like this, there's always a recession following. It's just about timing and when that happens that we don't know. But just so you guys are aware, an inverted yield curve, the shorter dated yielding more than the longer dated. Going over to our sectors and how they performed relative to each other on the week and on the month. We could look at the year, but this is something on FinViz that I like to look at every weekend to see if there's rotation going on from tech into the consumer, those defensive plays. That's what we started to see a couple of weeks ago, and it continued really big last week. Look at technology. down 4% on the week. I haven't seen that in a very long time. This is a pretty big sign that that rotation is definitely happening. Selling tech, right? All those companies that were up so much for the year, the communication services stocks, all those stocks that were up 100% on the year, some of them even more than that. Those are being sold, the profit is being taken, and it's being put in the defensives, energy, materials, financial, consumer cyclical, that type of thing. So that is something to continue to keep an eye on. And you can see here, look at this 3-month relative performance. Technology is still doing really well, but you're starting to see energy creeping up the leaderboard there at up 11%. All right, so that's your sectors there. Going into our compass, the SPY, right? So last week, we were making highs that we haven't seen since 2021. Really impressive moves on the QQQ, all right? The SPY has been doing very well also. But now what I'm seeing is, since we broke this on Wednesday, right? This 451.50 area, take a look on the 4-hour, it might be easier to see. You can see here rejection, rejection, support, 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 and then broke. All right. And then look at all of this here. Could not break. And then it breaks out on Friday, right off the open, and then a huge sell-off. So Friday was actually a very, very difficult, choppy day to trade. There was many markets that broke key levels and then pulled back with that huge sell-off that we saw in the afternoon. So if you had a tough time trading Friday, that is 100% a false breakout here, right? You could not get over it for these couple of days here after you broke down below that key level at 451.50. You break over it, you think, okay, this is going, we're going to be retesting the highs up here at 460, and then boom, on huge volume. That is a terrible sign. All right. But that's what we saw on Friday. Very choppy stuff to trade, but it is what it is. Going back to the daily chart, you can see since October, the market is up a lot. It's really, really been just an excellent, excellent market. Higher highs, higher lows. And then we got really extended here. You could see the 20 EMA. This is something that I use to determine momentum in a stock. In this case, it's the ETF for the index. It gets a couple of bounces, and then that third bounce, it's very rare that a third bounce is actually going to work. Did not broke down under the 20. Now what I'm seeing is this 444 seems like a logical place for this to bounce. Maybe the 443 area. If that breaks, you have the 50-day moving average right there. This is something that everybody's going to be watching. And then if that breaks, I mean, you're really still in an uptrend all the way down to this 420 area. You're still going to be considered in an uptrend. So, there's a lot of air under us right now if these things break down. But we need to wait and see what happens. Nobody can tell you the future. It's just technical analysis, what we're looking at. Now, going over to the Qs, this is the NASDAQ ETF, the QQQ. It's had multiple bounces along the 20. And this was about the 4th or 5th time. It just could not continue on that path. It's just not possible. Markets just do not go up forever without a pullback. Now, these are healthy pullbacks for the moment. These are very healthy. Right now, you have about 4% pullback on the QQQ. 4%. I would like to see how this one acts around this 50 moving average, but you can, a nice 5% pullback is very healthy. So you still have some room to pull back here. This 50-day moving average, that would be about that 5%. So I would say watch that 50-day moving average on the QQQ, see how it responds at that indicator, and see if we could get a bounce. But we're going to need some big volume, because what we saw here on these red days, The volume was very high. So that's distribution days. Distribution days are not good for the market. That means that big sellers are getting out of the market. And, we keep looking at that volume. But those are distribution days. The more that happen, it's just not great for the bull case. But right now, the market is still higher highs, higher lows. Until something really cracks, we just need to see where we get that support. So that's the QQQ. Going into a couple of stocks here that I'm watching is Apple. All right, this was after earnings. You see how the 20 EMA held up so nice, right? But like I said, everything was built in to the stock price. They were expecting something from the earnings report that simply did not come true, and it needed to be revalued. So now the market is revaluing it back to 182, right? 182 is basically where we were back in June, all right? And I think it's pretty funny how it breaks down, gaps down under the 50, but it has to test the 50. You can see here with this, the topping tail there. If we go into the 1 minute from this trading day, you can see here that this right here, that's the 50-day moving average. And you can see this huge sell-off once it hit. So this is a 1 minute chart. In 1 minute, it hits it. And then in 2 minutes, 3 minutes, it's all the way down to the bottom. So that just goes to show that that 50-day moving average was a huge indicator here, intraday. So you want to be aware of where these things are. All right. So that's Apple. Going back to the daily chart, we can see what happens here. The RSI is getting oversold. So there could be a buying opportunity coming up there with Apple. We got to find where there might be some support, because now look at this. Until we get to the 200, you really have a lot of room here. So we need to find out where the buyers step in and where they protect that floor. Right now, we don't know where that is. So that's on Apple. Taking a look at the VIX. So the VIX, the way that it usually will work, and we saw this back here in July, when you get that pop, a couple of days, right? Maybe 3 or 4 days, and then it settles back down to support. So right now, we're getting close to an area where I would say maybe is a good time to buy some of these stocks, right? Because we've seen this in the past. The VIX acts up a little bit, the market drops, and then it comes back down. And it starts to rest around that 13, which has been support in 2023. So we're going to just keep an eye on this for now. If it really is a bigger sell-off, you're going to start to see multiple days. All right. So right now we just have 3. Usually these don't last, that much longer. So we'll have to wait and see. And that's just looking at the VIX there. All right. That's going to be it for me. Hope you guys enjoyed the video. I'll see you on the next one. Take care, guys.